everyone. Welcome to Futurity Investment Group's Unlocking Potential. I would like to begin by acknowledging the traditional owners of the land on which Futurity Investment Group is headquartered, the Boon Wurrung and Woi Wurrung peoples of the Kulin Nation. We pay respect to their elders, past and present, and emerging. My name is Brooke Cordy. I'm absolutely delighted to be your host today. I host Money News, weeknights on 3AW, 2GB and 4BC radio stations. If you've ever listened to Talkback Radio, you'll know there's a very authentic connection between the host and their audience. When listeners call my program to talk about various topics, they are totally honest with me. They give their unedited, emotional views. And you talk about something that resonates with people, you know instantly, because the phones start ringing and the SMS system goes off. So your program becomes a really powerful barometer of what Australians think and feel at any given point in time. Now, you're certainly not here to hear me talk about the power of radio. The reason why I'm mentioning that is that I can tell you the issues we are going to be discussing at today's event are incredibly potent for Australians right now. The soaring cost of living, it's the number one issue that people want to talk about. The RBA might not be noticing inflation, but people can see it in their own lives. Everything's getting more expensive: groceries, petrol prices, property, education. Parents and grandparents, they are worried watching their kids struggling to get ahead. I hear this from people every single week. And hosting the Money program, it is really clear how much more engaged people are with their money after the challenges that we've all had the last 18 months. They want ideas and strategies for their finances, but they want those from people that they can trust. So I personally was very interested when I got the chance to be a part of what I know is a very topical discussion today. Today's event includes a presentation by the social researcher and research-based futurist Mark Mccrindle, a Q&A session with Futurity's CEO Ross Higgins, and a panel discussion with Kate Hill and Damien Otto from Futurity's executive team. Our keynote speaker is Mark Mccrindle. Mark is one of Australia's most sought-after demographers, futurists and social commentators. His passions lie in tracking emerging issues, researching social trends and analysing customer segments. Please welcome Mark Mccrindle.
Hi, I'm delighted to have this session with you to talk about the future of education and trends in intergenerational wealth and education expenditure. Well, in these times of fast change, it's important to look to the future and understand these trends. You get a sense of the changing times by looking at the words we're using more. And one word that we're using more than ever is the word unprecedented. In fact, we've seen unprecedented use of the word unprecedented. I saw this on Twitter and I think summed up the sentiment pretty well. Don't know about you all, but I could really go for some precedented times, and we wish for them. But the times we have are fast-moving times. We are living in a VUCA era, which stands for volatility and uncertainty, complexity and ambiguity. And in this context, we wrote a report recently into the future of education, which gave a great sense as to not only the changes we're seeing, but the opportunities we're seeing in this big and fast-growing sector of education. And we wrote in the report, the key characteristic of a leader is foresight. The reason they can see is that they see things not just as they are, but as they will be. And so let's have a look at education in its current state as it is, but also as it will be and the opportunities that it is presenting in investment for Australians. Well, a snapshot of the education sector. There are 4 million school students in Australia across 9,500 schools. Now, 2/3 are in government schools, but 1/3 are in non-government schools. And in fact, by the time we get to secondary schools, more than 40% are in non-government schools. Now, the average fees paid by a parent sending their child to an independent school is $20,000 per child per year. Now, you can see how that adds up and the scale of it in Australia. Now, let's think for a moment about the university sector. There are 1.6 million university students in Australia, and we think, well, aren't a lot of them sort of doing that study part-time while they have a job and pay it off? Well, actually, the majority of students in Australia, the way that we do it here is full-time university for nearly 3 in 4. But isn't the university sector largely overseas students? Well, not at all. Even pre-COVID, just under 1/3 of students were overseas, but 2/3 are domestic students. So it is a big and locally engaged with sector, and it comes at a high price. You've got to add to the university sector the almost 500,000 students that are in the vocational sector at TAFE, or vocational trainers or registered training organisations. Now you add all of that up, and that is 6.1 million students currently engaged in study in Australia. That is almost a quarter of our total population are students, most of them paying fees. In fact, the total amount we pay in education fees in this nation, just from private sources, is more than $40 billion per annum. So it's a big sector. But let's not just think that students are young people. Let's think about the generations in Australia. There are 6 of them. Now, for a start here, we've got the 20th century generations. Those of us in Generation X, or the baby boomers or the builders, we were shaped in the 20th century. And the Australian Bureau of Statistics data shows that we will live longer than generations that went before. We will remain younger longer as well, and we'll remain active in employment later in life as well. And that means it's not just young people getting educated, but the older generations upskilling, retraining, and career transitioning more than we've ever seen before. And of course, investing in education all the while. But then let's turn to the younger generations who are most likely to be engaged as students. The 21st century generations, generations Y and Z. When we surveyed these students recently for this study, we found that 74% of them believe lifelong learning will be essential for them to future-proof their career. And so education is no longer something that we do at the start of our life, which has to then sustain us for the rest of our life, but something that we plug into throughout our life. In fact, our analysis of today's students shows that these school leavers, have 18 separate jobs in their lifetime, an average tenure of about 3 years per job. They will work later, as we saw, but move across more jobs and also more careers. Every 3 or so jobs, they'll upskill and retrain. And again, the investment in their own education to future-proof their work trajectory is important and expected. Now, this comes at a cost, this elongated time in study, and that's why they're also staying with their parents longer. Not only is housing affordability a challenge, but their earnings years are pushed back later. And so that's where the bank of mum and dad and the home of mum and dad comes into play. In fact, we have called the stay-at-home 20-somethings the Kippers generation. And that stands for kids in parents' pockets eroding retirement savings. So if the parents can put something aside or have the right financial products to help their children through this time, it is certainly going to serve not only the parents but their children very well. Great nations invest not just in the next innovation, but the next generation. And families, of course, do that as well. They invest in their children because in that is the future. Now, I said 6 generations. We've looked at 5, but we finished up the alphabet with X and Y and Z, and that brings us to Generation Alpha as the latest generation of children, those that are starting their studies or in their primary years, and they are at a whole new level in terms of how society is shaping them. They don't just interact with technology, but of course they wear it. The year that Generation Alpha began being born was 2010. That was the year that the iPad came around and Instagram was launched. And so a little surprised to see youngsters touching any rectangular device. This little girl wondering why the device was not working. Every other device of that shape came to life when she touched it. Must need new batteries or something. They speak to their technology. It's a visual world for them. The world of TikTok, the world of YouTube. In fact, the #1 search engine for young teenagers is no longer Google. They spend longer searching within YouTube because they don't want to read an article on it. They want to watch a video on it. The World Economic Forum came up with this forecast. They said that 65% of children entering primary school today will ultimately end up working in completely new job types that don't yet exist. And so you can see the need to upskill for the future. Now, sometimes we hear statements like this and we wonder whether it will come to pass. Well, think about the school leavers of today. They are now working in jobs that didn't exist when they began their schooling, working in blockchain or as coders, app developers, or in VR, working in social media or as cyber security professionals, data visualization and drone pilots, whole new jobs that have emerged in the last decade, and that trend will continue on. But not only will they be working in new jobs and new careers, but in ways that have been transformed just in the last year or so. Working from home has been the biggest transformation to work in a century. It took COVID to be the catalyst to unlock the technologies we have and to decouple work from location. And what that means is that students now, as they move into their future jobs, can actually work remotely and indeed work global jobs even from a local situation. We worried, I think, as employers that maybe the productivity wouldn't be right with our team members working from home. I think we all worried we'd have Homer Simpson's with actual footage of him working from home there. Turned out not to be the case, and productivity was improved in many situations. It also means that study in the future will be hybrid. Will be learn from home just as we can work from home. In fact, today's students said that 70% of students see their ideal learning situation as hybrid. And so this means they will be able to take courses not just at local universities, but at global ones. Pay the fees, but do the study from their home location. Study from home, work from home, it's something of the future. And I guess that means that teachers will have to get used to the online classrooms. Primary teachers have had the chaos of this sort of situation. Here's my dog, and can I take a selfie? And hey, look at this. It's all chaos. And how contrasted that is to secondary schools. If we've peered in and seen our children in the high school interacting, and it's camera off and mic off, and does make a tough gig for teachers, and university students are engaged in the same way. So interesting, the life stages and how we interact and how that changes. If I was to use 5 words to sum up these emerging generations and their future, I'd say they are digital in the tools that they have, but the opportunities that provides. They're mobile in terms of where they will live and work and study. They're global in the outlook that they have, where they can work and how they can study. Social in the influence channels. That's how they're finding out which courses to take or which campuses to engage with, or for that matter, what brands or products to connect with. It's the social, it's the peer influence. They're consuming content in a visual form, not just a written form. And so for this digital, mobile, social, visual, connected generation, safety professionals are updating safety signs like this one that I saw for them. In case of fire, exit building before Instagramming. And no selfies on the way out, no Facebook updates, got to keep it safe out there. It's a different generation growing up in a changed world with a different trajectory for their future. We surveyed school leavers recently as they were transitioning from study to earning, and we asked, what are the biggest fears that you face as you move into the adulting stage of life? And financial ones were at the top of the list there. I won't have enough money to live comfortably on, or never being able to buy my own home. And so career and earnings are key for that. But the other 3 also involve their career outlook, not reaching my full potential, being stuck in a job that I don't enjoy or find fulfillment in, not making a difference with my life. You see, we've got a generation that are investing in their study so that they not only have the right earnings outcome for their financial future, but the right flourishing outcomes so they can find jobs and roles that meet their needs, that are lined up with their aspirations and goals. It's about potential and fulfillment and making a difference with their life. We wrote in this study that to some, work is simply a job, but to many more, it's a lifeline to social interaction, purpose, and a place of belonging. And so that means finding a job, a role, a career with the right workplace culture and the right engaging leadership form. We've got generations now that are investing in study so that they have options to work in a place that'll really help them thrive. They don't want an office situation. If you've seen Michael Scott from The Office, firings will continue until morale improves. Not really a life aspiration to work in a place like that for Generation Alpha. We surveyed today's students and we found that 81% of them feel very or somewhat equipped by their education to thrive in the workplace in the decade ahead. And so education is future-proofing them. It is delivering what they expect. And the Net Promoter Score, the value that they take, the positivity they have for their education is very high indeed. 94% of students agree that they greatly value having access to an Australian education. They're ticking the box and saying it has delivered what I hoped that it would. And that is a great vote of confidence in what they're paying for and what they're investing in this Australian education. So we've discussed these trends that are transforming their world, where they work and living longer and more careers and job flexibility and global workforce flows and new types of employment, entrepreneurial, new opportunities facing them, an aging workforce and new and emerging structural changes and challenges in their future. What this requires, therefore, for young people growing up amidst these changes is that they be future-proofed. But I guess what we're really saying there is that they be career-proofed. And I guess what that really matters is being skills-proofed. That's what they're looking for. That requires an investment, either from the bank of mum and dad or their own investment. And that's going to require the right sort of products and financial opportunities to meet these essential needs of their lives and their futures. But if they can invest in their education, complete that well, they will have great opportunities to not only survive these changing times, but thrive amidst them. And I'm sure you, as you advise your clients and provide them the right options, will help them flourish and thrive as well. Thanks for listening.
Thank you, Mark, for that fascinating presentation about intergenerational wealth and education expenditure. Mark, if I could just ask you a couple of questions about that presentation. Tell us about that idea of learning for life, because education isn't really just about the start of life, is it?
That's right. That's been the big shift. It used to be at the start of life, and that was enough to sustain us through the rest of our career. But firstly, we're living longer, and so we're working later, and so there's longer of a career to support. And secondly, there's more careers in there. And so the ability to plug back in and upskill and retrain has become an essential. And of course, we can work later now because it's a knowledge economy. And so it's the skills, it's the relevance, it's the upgrade in that knowledge that is key to remain relevant in a knowledge economy. It's no longer about strength or physicality. It's around the brain, the experience, and the skills that we take up and improve as we move through our careers.
Yeah, and so if we think about who the students are out there, they're not just young people, they might be mature or very mature if we talk about this kind of journey through life and education being at every step of the way.
Yeah, that's a great point, Brooke. We often talk about the aging of the population, but it's probably better labelled the down aging of the population, because we can't apply 20th century mindsets to the 21st century life stages. You've got 50 and 60 somethings that are career changing. You've got 70 somethings that are stepping back into a role and working well through their 70s into their 80s. We're going to see more of that in the future. And that, of course, is going to require an investment in our own education and skills. And the students of the future are not just those young ones leaving school. In fact, the fastest growing sector in education at the moment is the mature age student. And as you said, many of them are very mature indeed. So it's education for whole of life these days.
And if we think about the way we talk about education, I think historically we talked more about government schooling as free education, but I think the word choice comes into it much more now.
Yeah, that's totally right. A whole generation has grown up in a user pays mindset. They're happy for that choice and to pay for something that, sure, in the past might have been provided free and might even be free up the road, but they value and are prepared to pay for what suits their needs. I mean, think about private hospitals. We've got more than half of all households with dependent children have private health insurance, and so are likely to go to those private hospitals, not just the public ones, even though public health is important. And think about roads, which used to be public, but now we jump in our cars and we're on the toll roads and we're paying for this and that because we appreciate the benefits. And I think the same is true increasingly so with education, that even though there are government or publicly funded schools, the independent sector is fast growing, and you've got 40% of households spending after-tax money on education that might be free up the road, but they're choosing to invest in that because it meets the needs of their children. And that is true of the education, the tertiary sector as well. So we'll see more of that. People prepared to pay for what meets their needs and what's appropriate for them. And that requires money. And a whole generation is prepared for that mindset. It's a new way of looking at it. And that's the outcome that they're focused on.
Mark, it is always so interesting listening to you. Thank you so much, Mark Mccrindle. Futurity Investment Group provides innovative, tax-effective solutions to help fund education. It was founded more than 45 years ago, and since then, Futurity has assisted generations of Australian and New Zealand families to help save and pay for education. It's paid over $3.3 billion as education benefits and scholarship payments to their members and their families. Futurity is member-owned and mutually structured. It currently manages and invests over $1 billion in education savings and investments for more than 70,000 members. The person in charge is CEO Ross Higgins. Ross, wonderful to see you.
Thanks, Brooke. It's great to be here.
Tell us, who is Futurity?
Well, Futurity is technically it's a friendly society-based life company regulated by APRA, and it's been around, as you said, nearly 50 years. Now, the business today is being built on the foundations of a business or a financial institution known as the Australian Scholarship Group, which provided a different style of education product, and the $1 billion that we currently manage is basically in these style of products that are now in their maturity phase. So what we're doing today is effectively building a new financial institution atop of the foundations of the Australian Scholarship Group business.
And so what's special about Futurity?
Well, it's a little bit like Back to the Future, Brooke. You know, Futurity is a freestanding mutual. And if I hark back to my early days where we had AMP as a mutual and CML and MLC and IWF, my old house, were freestanding and for-purpose type organisations. And with Futurity, it existed, always had existed and always will exist to be a for-purpose, for education purpose organisation. And basically, you know, we exist for our members. We're a financially strong business with a large capital base that we deploy towards long-term sustainability of the business to support our long-term promises to our investing education plan holders.
You know, Ross, people who know you say finance is in your DNA. What sparked that passion?
Well, it sort of goes back, Brooke, you know, in the early days of the law and IWF, where I really have a great passion and love for legal structures around investment, particularly around trusts, family trusts, unit trusts. In the IWF days, we sort of founded the master fund sort of structures. So, you know, mixed in that was a whole lifetime of involvement with the insurance bonds, investment bonds, tax-paid investments. So, you know, my DNA is around those products and developing those products, but also doing it in conjunction with financial advice, because what I really like is not just the structure, but the financial planning advice that goes with the structure, whether that be estate planning, intergenerational planning, you know, the $1 million you need to educate 3 kids privately if you're going to go that way, home ownership, all those sort of life events that I say is real financial planning. I know it'll be heresy for some advisors who just are all about investment outcomes or super. I'm saying the financial plan is a lifelong financial plan it is about all those big things that happen through our lives that are not just about a lump of money when we retire.
And Ross, you're the architect of the remarkable Education Bonds product range. So what really sparked that idea? Where did that all come from?
Well, strangely enough, it came from financial advisors who said to me over the journey, if you could marry a tax-paid investment bond with a family trust, you'd have the holy grail of financial products, and that's basically what we've done at Futurity. So it is a newly invented product, and it's interesting what Mark was saying about lifelong education. What this product is all about is actually creating a structure that is akin to a family trust that's tax paid, it's dedicated for education, but the beneficiaries of that can be the grandparents for their own education, which may be a cooking course, it could be cultural, it could be religious, it could be for vocational in midlife, it could be career change, it could be early childhood. So this product is very different to any specific purpose education product that normally is one beneficiary and one owner. This has multiple owners, which could be parents, grandparents, and could have a whole range of education beneficiaries, which could be related or even unrelated. So it's a package, a very powerful package for parents, grandparents to set up a family education bond for 10 kids, or have a number of them for each branch of the family. So some of those big families who basically want to have arrangements to draw down against an education fund for children at different amounts, different periods, and even themselves, as I said, and it could be for any Australian or overseas course, any type of study or or education expense would be covered, Brooke.
And so, Ross, what would you say makes Futurity's education bonds different to every other product in the market?
So, Brooke, and this is really for our financial advisor audience, because it really gets to the crux of this type of product, because advisors may think, oh, this is just a variant to an investment bond. Well, the tax structure is quite unique and quite different. The interesting thing is that if you don't use the product for education, it actually defaults to have an investment bond tax treatment, which is great because you don't have to use it for education. But if you do use it for education, the thing to bear in mind is this structure from a legal and tax perspective separates capital and income. So it's almost like a capital account for your client and an earnings account for your client. And this has been the genesis of us recreating a family trust style product that has a corpus being the capital and an earnings. So what the situation would be is mum or dad would put 100,000 or 50,000 or save into a capital account, and the earnings on that capital account forms the education benefit account, and that is the benefit that's drawn down by the parent or grandparent discretionary, or it could be a fixed amount each year out of the education account, and basically the capital can be moved in and out, which is very unique. You don't have many financial products where you can put your capital in, take it out, or just effectively lend it to the structure as a grandparent might do. And then when you draw from the education account, there's a special tax benefit that's so powerful and basically unknown, that when you draw, for every $70 you draw as an education benefit for school fees or your own self-education, Futurity will pay you an extra $30 in a tax benefit. We encash a tax deduction that we get, and we fully pass it back. So, Brooke, what that would mean is if you were drawing down if you came to Futurity and said, I want to draw down $10,000 for my daughter's school fees this year, we would only debit your earnings account with $7,000, and we would pay you $10,000. The other $3,000 would be the encashment of that tax deduction. So there's not many investments around that can actually give you a 30% kicker. to your drawdown. It's a very, very powerful and unique tax benefit. And as I said, if you don't want to draw it down for education purposes, your withdrawal would be treated as an investment bond treatment, and the normal 10-year rules would apply.
Wonderful. Thank you so much, Ross. You've set the scene very well for us. Thank you. I'd now like to introduce Kate Hill, Group Executive, Financial Products, Marketing and Digital Ad, and Damien Otto, Group Executive, Sales and Distribution at Futurity. Ross, Kate, Damien, thank you so much for your time. We're looking forward to hearing from all of you. Damien, can I start with you? We heard from Mark Mccrindle that the size of the opportunity for education spending is massive, over $40 billion a year. So given that education itself and its cost is a true life event, how can financial advisors help their clients with their strategies to solve for this?
Yeah, thanks, Brooke. I think, first of all, that report issued by the Australian Council for Education report was 2019. So the realisation is that cost is actually getting higher. But if I take a step back for a moment and look at the role of a financial advisor, they are one that we touched upon being a transitional event role, where we consumers are more transactional. Take education costs, for example. We shared before how we touch upon the credit card, we touch upon the redraw of the mortgage, or some of us touch upon the grandparents to contribute to those costs. So when you look at the role of advisor saying, I'm looking at transitional event, and you've got the consumer being transactional, where can the advisor turn to look for a strategy for the client's problems, being that cost? Education bonds themselves are not well understood, therefore not well utilised on that basis. And yet for us, an education bond is actually advice-driven strategy. It's something exciting for advisors to stay connected with their clients long term. Why is that the case? You look at families, for example. Not only are they there, they grow, but they also change as life moves on that basis. Where do they turn to go, well, where's a tax strategy amongst this rather than just a savings plan? Because a savings plan is just getting a low return and a term deposit. So I'm looking for ways to do different things. I'm looking for flexibility. You know, where could I get some money if I need to get that money as well? Because life changes. We're in a pandemic right now. So, you know, things do change around. I touched upon grandparents as well before. So where are they looking to? You know, obviously we're starting to talk about estate planning. So you can start to see that the education bond is just not a savings plan. It's starting to talk about transitional events in someone's life, and where the role of an advisor is perfectly placed to talk to their clients about that problem being, how do I position myself for that ongoing education cost?
Kate, there's definitely a heightened awareness around education costs being on the rise in Australia. How can the education bond help families and grandparents meet these expenses?
Thanks, Brooke, and you're absolutely spot on. Each year we undertake research in relation to the cost of education. And what we do know is that education is increasing at around twice the rate of inflation. Last year, through our report, we identified that while many people, as you heard from Mark Mccrindle, believe that a government education is free, what we found was that for schooling a child for 13 years in government education costs parents around $80,000. Now that increases to $140,000 in the Catholic sector, and for independent schooling, it's well in excess of $300,000 to educate one child for 13 years. So with numbers like that, which can actually just take your breath away, it's really important for parents and families out there to really give serious consideration to setting money aside so that when those fees fall due, they're well able to pay for them. And I know there are many people who, you know, the letter comes in the mail and they're having to find thousands of dollars term by term, and somehow people just are able to find it. But wouldn't it be ideal to have money set aside so that when those payments fall due, there's money there and you've saved and put money aside in a really tax-effective manner, so you're getting the best benefit you can, not only from your own money set aside, but the investment savings and the tax benefit.
Yeah, well, with 3 small kids at home, I'm listening to all those numbers and I'm timesing it by 3, so I'm I'm right understanding what the numbers we're talking about here. Ross, maybe you can go back to what you were saying earlier about an education tax benefit. Tell us more about that.
Yeah, Brooke, this is very unique to the education product and its tax framework. So with your 3 kids, if you drew, and as I said before, you would have an account that would be broken into a capital account and an earnings account. And if you drew, say you wanted to draw $10,000 from your earnings account to pay school fees for one of the children, basically what would happen is for every $70 you drew, we'll give you 30, which is us encashing the benefit of a tax deduction. So what we would actually do, Brooke, is you'd say, give me $10,000, but we would only debit your account with $7,000, and Futurity would pay you from elsewhere within the business, from our management reserves, an additional $3,000. So it's a pretty powerful tax benefit that's very unique to this structure. Now, just on tax, of course, this is a tax-paid product like a normal investment bond, so the Futurity will pay the tax on the investment earnings in the portfolios each year based on the option you select. So that could be at a 25% effective rate. And as I said before, the other really powerful tax feature of this is that if you want to draw it down for non-education purposes, such as buying a car, going on a trip, or you could use it for education, but you don't want to draw from the earnings account, you'll get investment bond tax treatment, and the taxpayer will be actually mum or dad, not the child.
And Kate, blended families. I mean, blended families are a feature of most families because in Australia, we have one of the highest rates of blended families per capita in the world. How does the education bond help families in this situation?
That's absolutely true, Brooke, and we're certainly seeing more and more blended families, and I'm sure advisors out there are dealing with separation and divorce situations within their client base all the time. As you've heard from Ross a little earlier, the family education bond allows for up to 10 education beneficiaries at any one time within that structure. But what we also have as part of our Futurity education bond range is the individual bond. And what that provides is real certainty around the one individual education beneficiary per bond. So when you think about blended families and potentially the need to have separate accounts and perhaps some confidentiality across the family unit for money set aside for a range of activities, including education, the individual bond is really set up purposefully for exactly that.
Damien, back to you on intergenerational wealth, which was the key feature of Mark Mccrindle's presentation earlier today. Tell us how the education bond accommodates intergenerational wealth and estate planning needs.
Yeah, look, Brooke, I think one of the well-shared statistics in market is there's 3.5 trillion worth of wealth to be transferred over the next 20 years. So there's a bit of, again, another piece of the pie sitting there to be discussed with advisors and their clients. You know, the funny thing with wealth transfer and estate planning is families. Families can be unique, and the intention of those that are going to transfer their wealth is about, looking for the long wealth building of their family, their friends. But those receiving the money are probably looking at what electronic gadget, what best car next to buy. So there's a bit of a conflict on that wealth transfer. So when the advisor is sitting with the client, they're going, well, how can we actually give you some certainty, some protection around things? So if you look at the estate planning side of things first, bonds sit outside the will. So, in a contested will scenario, a client can still have the legacy and the advisor can still meet the client's wishes by knowing that the bond is set there for its purpose. An education bond with Futurity has a 99-year life to it. So even again, at a death of, unfortunately, the bond owner, the bond can actually still continue for its purpose. And that's that peace of mind. That's that beyond the grave, piece for grandparents to know that it's still meeting its purpose. But I think one of the most important things that Ross has brought to the business, the product, the strategies for advisors, is the discretionary like investment bond where you can actually have multiple beneficiaries within the one bond. What that really touches upon is for a grandparent with, as Kate touched upon before, blended families, the grandparent can actually have a position where they can put, the grandchildren from different families into one solution. And that really, again, gives them that peace of mind. Remembering you can also add and remove the beneficiaries from that education bond, because not everyone is born yet, and there still may be more grandchildren to come. So there's that flexibility on that. But when we start talking about that unfortunate event of death, being the death of the bond owner, or actually death from other events, it could be from superannuation, it could be from a life policy. So if that money is transferred to the beneficiary within the 3 years, it effectively becomes a de facto testamentary trust. So what does that mean for advisors? We start getting into tax strategy and how we can still meet the education cost, good planning, but as Ross touched upon before about the tax bit, remembering when an education benefit claim is made on an education bond, the claim that goes through the earnings, the tax is at the beneficiary's marginal tax rate. So when we have a death of a bond owner and also have a death where through superannuation or life insurance policies, there's a trigger of a transfer of money. Now, if that occurs within 3 years and it goes to that beneficiary, we also start triggering a new environment of tax. So what happens there is that the beneficiary, when making an education benefit claim, is taxed at their marginal tax rate. What happens when it's a death event is that it triggers the adult marginal tax rate. So it has an added advantage of the gross rebate that's coming into the bond, along with the investment menu. The growth that happens within the bond not only meets the education cost, but it actually has a growth of the bond. So again, beyond the grave, grandparents can be at peace of mind that it's meeting its purpose for education cost and also wealth building for its family.
And I understand a financial advisor recently worked with Futurity to structure a bond where certainty was required.
Yeah, look, I was reflecting the other day, and I'll probably take the names out of this and slightly change a couple of scenarios for the protection of the individual case. But it touches upon what I was discussing before about a grandparent. That strategy with the advisor was that the grandparent wasn't going to live for much longer on that basis. But that grandparent wanted two things in life. And the advisor was looking for, where do I solve this problem? The problem was they wanted to support the education costs. They wanted their grandchildren to have a good life, but they also wanted their grandchildren at a point in time to receive some wealth. And that trigger point was at the age of 24, the grandparent thought that those grandchildren, when they reach that age, they can move on in life. But with having a good education and having now some wealth sitting behind them, that they would have a good start in life. However, what the grandparent didn't want to do is have the grandchildren know about it until he'd passed away. So that brings in a new feature that which the education bond has, is the bond guardian feature. So as the grandparent passes away, the bond, remember, can continue. And the bond guardian role steps in to fulfill the payment of the education cost, to fulfill the event to the age of the child 24, and then the bond can transfer over to that person at age of 24. So what does that mean? At the age of 24, the bond they still have. That 24-year-old can also go on with what we touched upon before, lifelong education. I know myself, I'm very well north of the age of 24, and I've just recently done some education as well. So you can still use education bond, but as that 24-year-old becomes a parent, their children can now step into that education bond as well. So you can see the lifelong, not only education benefit, but the lifelong use of wealth for the grandparent that wanted to make sure that their grandchildren were well looked after in life. So I think, in that basis, it's not just paying for the education cost, it's also making sure that the wealth transfer is met for its purpose and gave those grandchildren a great start in life.
And what other examples have you got of Futurity supporting financial advisors?
I think, and we touched upon a little bit before, being, an advice-driven strategy, not just a transactional event. So it's about forming the long-term relationships. So advisor to client is about relationships. But remembering too that advisor to the grandchildren or the children can also be an event. You know, it's well known that at times, unfortunately, the advisor and the client has a healthy relationship, but the advisor to client, the relationship's not as there. The education bond can be that link to linking the relationship ongoing as well. So knowing that there's an education bond strategy, you can also well say, well, there's superannuation, there's life insurance policies events that occur. Superannuation serves its purpose, but there is a cap on age, there's a preservation limit that sits in there, and also when there's a death, payments are made. Same with life policy, you know, payments are made. So you've got this lump sum of money still sitting there with obviously family members' life events still to occur. So I think it's just bringing, for an advisor, again, a lifelong strategy in with them. But it's also linking into the tax-effective strategy, not just a savings plan. Other points of interest, I think, for an advisor when sitting down with their clients is the tax compliance side of things. There is no tax reporting. There's no tax file number because the bond itself is an accumulation phase throughout the life. The only tax trigger is if they went to take a non-education withdrawal pre-10 years and they drew upon the earnings, there would be a tax trigger there. But that's not the purpose of the bond. Other little things are like creditor protection, which also gives a peace of mind. The flip of that is also asking, well, Futurity, what are you doing to help advisors? So I think it's important that we look at, you know, the online tools that we have for advisors along with having a national BDM model. Now, pretty proud that the online function has a calculator that advisors can use to sit down and really work through their clients and show them the trigger of events that could happen with education cost and show them that the benefits there. You know, obviously the portal will hold the SOAs for advisors in going, well, I found a solution, how do I write it up? There's case studies and there's investment menu and returns that sit on there too. So there's that bit of give. But also we have a direct channel. We do actually reach out to the direct, but we only give general advice. So obviously a common occurrence is as that question is asked of us and it gets into personal advice, that's when we also support the reference to seeing a financial advisor. There's two other points I just quickly want to share, Brooke, is that we also have an education loan facility. Now that's not advisor-led, but at times, as we've shared with you, the education bond is a long-term investment strategy. There might be in that blended scenario the need for education today. So the education loan can be that short-term solution into building wealth for the long term as well. So I think it's very important that we look at short and long term. And finally, Brooke, I'm just proud that we've partnered with the FPA Australia on a scholarship program that also gives back to growing the advisor industry. It's through the Advancing Women in Financial Planning, where it's helping women entering as a financial advisor or returning. Because I think, end of the day, greater diversity brings greater conversation brings greater strategy for your clients. So I'm pretty proud that we partner with the FPA on that program too, in terms of giving back as well as sharing strategies.
Damien, I might pick up as well and ask a little bit from Ross. I guess that was one of my questions to you, Ross, too, about how education bonds increase the appeal and power of a financial advisor's service and product offering.
Yes, Brooke. Look, this is an advice-driven product, and that's what it's got all the features and structures that are calling for advisors to engage with their clients long term. So it's not the advisors certainly in their service offering to clients will be looking at the investments, and we haven't even mentioned the investment menu. So there's 22 options. So advisors will be advising between either a sectoral approach or a diversified approach. So it has got a multi fund optioned menu. But then there'll be new frontiers of advice, because every time you want to draw down for one or more children in a particular year, there'll be decisions to be made, whether you're drawing from capital, whether you're drawing for non-education purposes, because it might be too early to draw against the earnings account. So there's going to be lots of touch points with this structure for advisors to substantiate and deepen the relationship with their client in a fee-for-service type regime. So so clearly advisors who can get clients lump sums and have a big book of advice around this can experience not only the parents or saving, but the grandparents and then the kids coming through. So there's lots of powerful touch points between a client and an advisor over a long period of time, and new frontiers of advice.
And Ross, I think it's important as well to just dwell on for a moment the fact that Futurity is a for-purpose mutual.
Yeah, Brooke, that's really important to us because we're not just about the financial services side and the product. Futurity exists, and it's part of its DNA is actually to advocate on behalf of members on all things education, and that could be through the research on cost of education. We do an annual parents report card. We do a teachers report card based on research. We back the NETA Foundation to support excellence in teaching here in New Zealand and Australia. We support the Smith family, and we've just established the Futurity Education Foundation, which exists to help underprivileged children, in particular with education, but with special focus on regional, Indigenous children, and our ongoing support of the Smith family will be through that foundation. So that's part of our mutual dividend. So of course, not being shareholder based, we're not paying an annual dividend to shareholders, but what we are doing is ploughing back a mutual dividend to the benefit of education purpose, not only for our members, but for the wider community.
And so, Damien, that's given people a lot to think about. What's next? I mean, how can a financial advisor find out more?
Yeah, look, first of all, I just actually want to take a quick moment to say thank you to the dealer groups, the advisors within the dealer groups and self-licensed advisors that actually have already opened the door to us and actually shared some problems and actually implemented a Futurity education bond as a strategy. So I thank those advisors for taking the courage and having a conversation straight away as we start to go to market. Yes, obviously I've got a national BDM model, and obviously we're keen to have those, as I say before, greater conversations around Australia as well. But there's also our website, which obviously has some great information as a kickstart as well. But in short, yes, we will be reaching out. You will see us through various associations and dealer groups, presentations as we start to get back into normality post-pandemic, or you'll see us on Zoom. But we're certainly out there wanting to have those conversations. So I ask those advisors who are thinking through, reach out to us, but we'll also be reaching out to yourselves in terms of having those greater conversations.
Terrific. Thank you, Damien, Kate and Ross. Well, that concludes Futurity Investment Group's Unlocking Potential. If you would like to know more, please visit the website www.futurityinvest.com.au/financial-advisor. My name's Brooke Cordy. Have a great day.